Today we will view in Odoo version 18 community that how can the inventory valuation automatically hit the accounting journals and how the valuation is actually like done in Odoo. Okay, so for that we have to first visit. We just open up our general ledger here. This is blank as of now, just so that we can watch uh, whatever changes are happening within the ecosystem. Okay, so first of all, let's go to the purchase or inventory module or a product. So we already have created a product named valuation. All right, so this product, let's say this has zero cost price. Okay, this product has the category of valuation. Okay, just for our this experiment's sake we have done this. This is a good, we are tracking its inventory, we do not allow the negative stock, and these are the basic outlines of a product. Okay, so if we go to configuration and product category, to enable the automated inventory valuation system, we have to come here and we have to manually enable this function called inventory valuation. Okay, so after enabling this, we just have to give a quick review of the accounts that will hit whenever the system uh, finds out if an item is going in or out of the stock. These are the income and expenditure accounts that will get hit whenever cost of goods sold is hit. Okay, and for this purpose, so we just discovered two things. One, we need a product which has a specific category, and that category actually defines if the valuation for that category will be calculated in an automated basis or manual basis. Okay, and the costing method is also here, so you can select anything between standard, first in first out, or average cost. So that's one. Number two is like for the Anglo-Saxon versus this is called Anglo-Saxon accounting. Okay, so the Anglo what does this mean is we kind of have to understand how do we want to hit the inventory out into our accounts, because in Continental method, which is like normal for most of the companies around the world, they, whenever the item is purchased, it directly hits into the cost of goods sold. For example, if we just purchased 1000 items of the product valuation at $10 per unit, the system will automatically put the journal cost of goods sold debit, interim stock credit. But for Anglo-Saxon accounting, the account system will wait until a portion of the item is sold, like stock is out for delivery, adjusted with a specific sales order. Say within these 1000 items, we just sold 200 items to a customer, right? It only automatically detects how much did we purchase against those 200 item orders and books that cost into the cost of goods sold. So this is the difference versus Anglo-Saxon and Continental. Right now we are looking at the approach how the Anglo-Saxon accounting method works for the valuation method. So let's proceed for the purchase module. Let's directly go to an order. It is a new order, say demo vendor, the product is valuation. Let's say we ordered 1000 items, each with a unit price 10. All right, then we confirm the order, we receive products, all right. And even after the purchase is done, let's see how the general ledger looks out. It has no entry yet because the item is not into the inventory yet, okay. But whenever we validate the items, like 1000 items is into the account, into our inventory already, you see a journal entry, say inventory valuation debit, interim is stock, or stock incoming is credit, okay. Fine. So let's do one thing. Let's sell this item once again. So let's sell this item to a customer. Say we are selling 100 units, each priced at $20, 20 unit, okay, 20 currency per unit. So after confirming this, we just have to go to the delivery and validate this out. We just want to check this general ledger once again. No changes are implemented yet. So whenever we validate the output, let's see how it like comes out. This is how like the inventory is hit. So the inventory valuation has only 9,000 worth 9,000 reals worth item in it. The stock incoming is minus 10,000 and the stock outgoing is 1,000. Now, and move to the purchase bill, okay. The one purchase is waiting the bills. So let's proceed with the bill now. Say this is for today. Confirm. We can see the journal, exact journal that is being put into here. Stock incoming is debit, payables are credit because we have to pay our vendors, right? Let's look at the general ledger now. It actually shows you we have payables worth of 10,000 to our vendor, okay. Fine. So now let's go back to the sales orders, and this is also pending invoice, right? So let's proceed with the invoice, regular one, and we just put the invoice date and confirm this right away. Let's look at how the like let's look at the specific journal. See, this is the automation here. Sales account is credit, stock outgoing is like going down, right, for 1000 reals, or like say 100 units at 20 for 100 units, okay. For 100 units the purchase price was 10, so that's why 1000 is going down for stock outgoing and it gets nilled. So the cost of goods sold is hitting by 1000 QR because only for these, I mean, like only 100 items are being sold. So that's why the purchase price, actual purchase price of these 100 items are reported in COGS and account receivable as well, because these will be like to be received from the customer. So let's check what happens with the general ledger. Voila, we only see 1000 being hit into the balance sheet, sorry, profit and loss account, and the inventory is valued at 9,000. We still receive 2,000 from our customer. We do not have any stock incoming versus outgoing gap yet. All we have is our closing inventory at 9,000, and we just sold 1,000 of our closing inventory worth of 2,000, right? So let's go to the inventory model and we check for the valuation. The valuation actually says the total value is 9,000 reals. So this is how the whole ecosystem works under Anglo-Saxon. And under Continental method, if you guys are like want this to be exact, we will release a video later on. For now, that should be all. Thank you.